Okay, it is the top of the hour, so I'm going to go ahead and get us started. We have a lot of amazing content today, and I want to make sure we're over it all. We are going to dive in. Thank you again, everyone, for joining our webinar today, Risk Mitigation Measures and Navigating Disruption with Confidence. Today's session is being recorded, and we'll send out a full recording and the slides after the webinar wraps. So before we get started, just want to go over a few housekeeping rules. A few quick tips. You will see the join audio icon at the bottom of your screen in the toolbar. So if you have any questions, please feel free to put them in the chat section. And then if you have specific questions about the webinar, you can put that into the Q&A section, and we'll answer those questions later on in the webinar. If you have audio issues, you can access your audio settings also in that same navigation bar, and you'd be able to adjust those settings while you're actually in the webinar invite. This is a CPE webinar, so in order to receive your CPE for attending this webinar, you'll need to respond to 4 out of 5 of our polling questions. Stay on for the duration of the broadcast. And then if you have any technical difficulties responding to the polling questions, please send an email to Elevate Learn. And you'll need to include your name, today's date, along with the session title and your polling responses, and then we'll be able to help you out. Today's learning objectives are evaluating common organizational risks in today's business environment, assessing the impact of those risks on your business operations, finances, and reputation, and then discussing practical strategies to mitigating those risks. Our presenters for today's session are on this slide. We have a lot of good content that each of them will be educating us on during the webinar. And they will each introduce each other. They'll introduce themselves when their section pops up. Our agenda for today is taking a deep dive and reviewing the Internal Audit Foundation's Risk and Focus 2024 survey, and then navigating holistic risk management, as well as enhancing your ERM program, top risk trends that we're seeing North American companies face, as well as approaches to mitigating those risks. And then we'll also cover emerging risks that we're expecting to see in the next 3 to 5 years, and some recommendations on how you can mitigate those risks as well. And then that leads us to our first polling question, which is, how confident do you feel about the effectiveness of your current risk management strategy on a scale of 1 to 5, 1 being not confident, 5 being most confident? And now I will turn things over to Liam, who's going to walk us through the Risk and Focus 2024 survey.
Thanks, Caitlin. Much appreciated. So as you guys responded, we saw a lot of the same kinds of responses in the survey. A lot of concern these days about the pace of change in the industry, and internal audit struggling to keep up. So I'm not sure if you guys are familiar, but the Internal Audit Foundation does an annual survey. It's a global survey. As you can see, the number of responses are very significant. In the US alone, they get about 450 responses from chief audit execs. The focus of the survey is really trying to understand what are the focus risks that people are concerned about, and secondly, where is internal audit spending their time? And we found some very interesting responses to that. And so you can see the categories here ranging from business continuity to supply chain, typical categories that you would expect to see in this area. But some of the main risks, and we're going to cover each of those key risks today on this conversation we have with you guys. And so we are open for questions as well. So please do feel free to put any questions you have in the chat. So Caitlin, on the next slide, you'll see some of the highest risks that came through on the survey. As you would expect, cybersecurity is still top of mind for internal audit execs, not only now, but also in 3 years. They're not expecting to see much change in this area. It's also the number one in terms of where people are spending most of their time. And so Mark Knight, our partner in charge of our cybersecurity practice, is going to do a deeper dive on the cybersecurity issues, supply chain, third-party risk management, vendor risk management, another key topic. Audit execs spending a lot of time in this area, really with a big level of concern because it's very much related to cyber. Third-party cyber risk is very significant, and that came up a lot in the survey as well. Human capital management's a big topic, talent management specifically, attracting and retaining talent both from across the company and across an organization, but specifically within internal audit. A lot of less folks going into CPA, path these days. So it's been a big challenge to get and retain people. And then lastly, regulatory changes. And then two other areas we are going to dig into: digital disruption and climate change. Those are the areas where we saw the biggest expected change over the next 3 years. Right now, AI, digital disruption, was ranked number 5 in terms of risk. 3 years from now, people are expecting that to be the second highest behind cybersecurity. And that's also where they expect to spend a lot more time. Right now, it's ranked number 10 in terms of level of effort, going up to number 2 in the next 3 years. Climate change and the regulatory environment around that is also expected to significantly change, moving from number 14 to number 5 in terms of key risks, and up from 14 to 7 in terms of level of effort. And we are going to dig into both of those areas today. AI is primarily been the biggest area of concern for audit execs in just trying to keep up with the pace of change. The level of advancement in that area versus the level of actual skill set around our internal auditors is a big concern for folks. So we'll dig into those areas a lot more later on. I think you have another polling question, Caitlin.
Yes, I do. Thank you. That takes us to polling question number 2, which is, what are the priority risk focus areas for your organization? Cybersecurity and business continuity, supply chain and third-party risks, human capital, regulatory changes, digital disruption, or climate change?
As we're waiting for this, another area actually that came up just to talk about briefly was corporate governance, corporate reporting. In the survey, internal audit execs are saying they're spending a lot of time in this area, but they actually feel it's really low risk. And so that was a main challenge for folks to say, how do we actually get out of doing corporate reporting, SOX, for example, for public companies, and actually focus on these key risks? As obviously you guys are agree with cybersecurity, supply chain, human capital, one of the biggest challenges that came through the survey was internal audit folks just not having enough time because of the level of corporate reporting work they have to do. And so that's a big focus in the survey of how do we actually make that shift over the next few years to train people up and also to get our executives across an organization to understand that SOX may be not the highest value for an internal audit group. So one way to do that is holistic risk management, which is on the next slide, Caitlin, if we move forward. And execs really trying to step back and say, how do we get integrated with the CEO, with the CFO across an organization to not be looking at risk in a silo manner, but really taking a look back to say, how do we be more holistic in our approach to risk? Go beyond just risk assessments once a year to really go to dynamic risk assessments every 3 months. How do we build real risk tolerance plans, risk mitigation plans, and really involve execs to do that? Because in the workshops that they did as part of the survey, a lot of conversation came up about what is the role of an internal audit executive going forward. And it was very interesting to hear what people were saying, which is really, you've got to be a politician, you've got to be a diplomat, you've got to be very good at navigating the executives, working with them very closely, and not being out on an island. Being a diplomat in the sense of you've got to give hard news to the execs and really make sure they're welcoming to that. How do you actually really focus on your communication skills? That was a big issue for internal audit execs to say, how do you become a true communicator in terms of giving bad news and making sure that the execs are listening in those situations? You got to be a team leader because It's very hard to attract, retain talent. That's been a big issue for audit execs. And then you've got to be a lifelong learner. So on the next slide, as you move forward, I mean, you'll see some more of that around ERM, but the biggest issue for all execs right now does seem to be AI, and how do you actually keep up with the pace of change? How do you make sure that you are going to get ahead of this? And how do you make sure you've got the right tools in place for audit execs to be able to monitor risk in those areas? That is probably one of the biggest things that we saw coming out of this. So, but the biggest risk was cybersecurity. So we're going to hand it over to Mark Knight to take over. Mark.
And we do have another polling question before Mark really dives in. So, does your company have a dedicated chief information security officer? Yes, in-house. Yes, outsourced. No, but we're looking for one. No, don't think we need one. Or no, it's embedded in another role in the organization.
And as we give everyone about 45 seconds to respond to this question, just a reminder, if you're having issues with polling, you can email elevate@armaninollp.com with your polling answers, basically the polling numbers and all the ABCDs or whatever your answer was, if you need CPE for the event. So we'll go over that at the end as well, just in case you're having any issues with the polling process. Wanted to mention that. So we'll give a few more seconds on this poll and then close it out. So let's say 10 seconds and then we'll close this one out. All right, we'll wait for those responses to pop up here. Okay, thanks. Well, Liam, thanks for the introduction. My name is Mark Knight. I'm the partner in charge of our cybersecurity and privacy practice at Armanino. I sit in the Austin office, but as you'll see today, we have folks all over the US in our risk practice. Today, I'm going to be talking a little bit about why cybersecurity shows up as that number one risk across a lot of organizations. And when I saw that poll response, a little surprising, a little not, because of how frequently cyber incidents are showing up in the news today. So I thought of this in a couple of different ways. One, you have requirements coming for public companies from the SEC. You have cyber reporting requirements and other things that are forcing public companies to publicly notify when incidents occur. And then you have these business disruptions that are occurring as a result of cyber incidents all throughout the news across every different industry and with many different root causes. So I thought, as risk assurance professionals, what can we do and what can we learn from these types of incidents? So let's start with what's been in the news. And this is just a tiny sample. Obviously, every day something new is happening. I know here in Texas, Ascension Healthcare, we have hospitals running on paper forms because of a ransomware attack that has shut down their IT infrastructure for going on 3 weeks, I believe, which is an incredible burden on that healthcare system and the hospitals. And so that's just an example of the type of impact that you might see and the things that are showing up in the news every day. So starting with another healthcare organization, Change Healthcare, that a breach starting back in April. And, you know, depending on the industry that you work in or your interaction with pharmacies, you may not be aware, but ultimately what this did is it knocked down the fulfillment process for pharmacies across the US who relied on United and Change as their fulfillment processor. The root cause analysis, and these are always, we're very early days, right? So we're still learning a lot, but the root cause analysis for Change Healthcare's incident, it's not a sophisticated third-party incident. It's not something that is really a nation-state actor or something that requires high levels of sophistication as far as we can tell. What it looks like happened is that a ransomware threat actor went onto the dark web and paid $10, some small amount of money for some known credentials for user IDs. They found a web exposed Cisco device, we believe, in Change, and they were able to just send those known user IDs and passwords against that. That device did not have two-factor authentication enabled, and so just with that user ID and password, they were able to get in. And then once inside the network, traversed and were able to lock down using ransomware software and lock down those systems, prevent them from being able to do business. And there's been a lot of questionable responses throughout this, where we're not entirely sure whether ransoms have been paid or not, whether the data has been publicly breached. But the downstream impact of that is broad, and this can just show how one less protected device on your network can result in a major outage. Going to the Samsung incident back in November 2023, this is an example of a far more sophisticated breach, right? So previous one could have been an individual or a small group, whereas the Samsung breach is believed to be a nation state sized actor. This was a sophisticated supply chain attack going through third-party business application software that basically Samsung was using the software, had it inside of their network, and by that software being breached, then exposed some of their customer information to disclosure worldwide. So this is an example of a nation state actor causing this type of incident, which is obviously a little different from before. And then finally, the Bank of America data breach that occurred. This is an example of a third-party incident causing downstream impact. So there's a ransomware attack on their third-party vendor, Infosys, that compromised a large amount of Bank of America customer data through that incident from the threat actor. So 3 different incidents, 3 different root causes. What can we learn from that? So first is third-party risk. The reality is whether in the Change Healthcare world where United has partnered with and has bought Change as a part of their overall environment, or in the Samsung incident where it was a third-party application, or in the Bank of America breach where it was a third-party vendor, Infosys, who's doing software development, you see a lot of third-party risks becoming more apparent and a clear incident or cause of these incidents. So the evaluation of risk at third parties is becoming a much larger and more important process of third party or of overall risk management for an organization. Who are these third parties that we're working with, both software vendors or contractors or who we're purchasing, and what is the diligence we should be doing? That's where you'll get into what else can we do? Obviously, we have to work with third parties. How do we evaluate those third parties? There are things like SOC reports and third-party attestations on vendors that can be done, but those have specific requirements and processes that go in. When you look at third-party vendors, you might have a risk assessment process for a vendor, or in the case of acquiring a company, you may have a process for doing due diligence. How are you evaluating the impact of bringing that third party into your environment? And what is the overall risk exposure that comes from bringing in this new entity? Those are all factors that can be evaluated when determining whether, one, this is a vendor you want to work with or a software product that you want to use, or in the case of an acquisition, is this a company that really fits into our overall risk management strategy, as well as the business case that needs to be made for how they'd be accretive to the overall organization. The next thing that we're learning from these attacks is the importance of knowing how quickly you can recover. The reality is that we believe in all of these cases, these organizations do have the ability to recover their data. Sometimes when these ransomware and lockbit attacks occur, the threat actors are able to lock down both the core source of data in the databases and also the backups of that data. But in most cases, just locking the core source of the data and then potentially exfiltrating it and getting copies of it is all that they need to do to cause a business disruption. And the reason for that is that even if you have good backups as an organization, the recovery time objective for restoring from a complete outage could be weeks or months. And that's an important key factor to understand when evaluating how your risk management strategy addresses these types of incidents and attacks that could occur. Sure, we have backups, maybe even offline backups that are harder for a threat actor to get to. How long will it take for us to get back up and running? If you're a hospital, 3 weeks is way too long, right? You've got hospitals operating on paper for 3 weeks. That's not good for the patients. That's not good for anyone. So when evaluating the ability to recover, and maybe you're making a risk management adjustment on what types of risks you're willing to live with in believing that you have the ability to recover, that needs to be informed by the amount of time that would be required for that type of recovery. The reality is that once these incidents occur, say you have cyber insurance or a third-party provider that you can bring in, you're going to engage legal counsel and all these other parties in that process. You may even be negotiating payment with the ransomware threat actor to get the keys and ultimately decrypt your data. All of these things take time, and understanding how quickly you can respond, whether it means something along the lines of paying a ransom, which there's differing opinions on whether that's appropriate or not based on the state that you operate in or the countries that you operate in, or if it's just recovering from the backups and spinning up your entire environment from scratch again. How much time will that take, and what's the impact on your organization, your customers, and everyone else going to be if that's the recovery process? And so that kind of speaks to the next point, is keeping it simple. I mentioned the method by which these incidents occurred. In the case of Samsung, with a highly sophisticated nation state actor, you may have incidents where you have hundreds or thousands of developers spending thousands of hours working on how to get into your organization or to the particular software in use. So you need to think about, what is the nature of the customer data that we store, and how likely is it that a nation state actor would be interested in investing that kind of time into breaking into our environment, right? If you're working with the government, you're working with financial institution or that type of data, you're a higher risk target. But everyone is a target for these types of attacks, as we've seen, small and large businesses. So really the key is to keep it simple. The main way in has been through known vulnerabilities, common vulnerabilities, unpatched systems, out-of-date systems. You've got email phishing campaigns and simple entry routes through people clicking on a bad link into environments, or things like missing two-factor authentication or simple authentication, known breached data sitting on the dark web, allowing individuals to break into internet exposed systems and gain a foothold into an environment. So doing those basic things puts you way ahead of the overall environment, makes you less likely to be part of a breach, and really reduces risk profile. We could jump to the next one. One of the things that's been interesting is some of the cyber insurance groups are starting to put out data on common themes that come from paid out incidents from cyber insurance carriers. And some of that data is really enlightening, because you can see that there are certain factors that are present in companies that typically have internet exposed systems. It might be certain types of firewalls and other technology that are sort of known to be used by larger organizations that are not cutting edge. So those are 5 to 10 times more likely to have insurance payouts. Internet exposed remote desktop protocols and other things that hopefully, when doing cyber risk analysis and doing pen testing and other things on your organization, you'll have your teams or your external third parties that are doing these tests bringing up, this is your threat surface, these are the risks that are involved within your organization, and these are the most common ways that folks would have the ability to get in. But identifying that low-hanging fruit is really important. So how do you approach this from a top-down perspective? First and foremost, I'll go back to our poll. Have you assigned someone whose chief responsibility is the information security processes for your organization? So do you have a CISO, or have you assigned those responsibilities to either a third party or someone within your organization as the core point of responsibility for these risks? If you think for public companies, the SEC has kind of shown what they expect out of organizations, because you are now required on an annual basis to, in your 10Ks, identify who inside the organization and within the board take those key responsibilities for cyber risk management. So ideally, depending on the size of your organization, it's an assigned chief information security officer, but that's not practical for smaller organizations. So either through virtual CISOs, through a third party, or even assigning those responsibilities to someone within your IT organization. The first and most important thing is determining who is going to take charge within the leadership team for that risk management process. And is that an appropriate person? Does that assignment of risk management have a key way of reporting up through the board and making sure that management's going to make decisions based on an overall risk management strategy and not just the bottom line? Because obviously security is not free. And so implementing controls, having third parties come in and do assessments is not free, sometimes not cheap. So are we making informed decisions? And do we have someone who has the level of influence within the organization that is appropriate, speaking all the way up to the board about that? Once we've assigned that accountability, then we think about overall governance. Now, this should really be based on your policies and procedures. And I think the best way to approach this is not to try and reinvent the wheel for your organization, but to look to your industry groups or third parties. What is a framework that we want to base our risk management program on? So something like using NIST guidance is probably a good table stakes way that an organization should evaluate their cyber risk management processes and conduct an overall risk assessment to identify what are our gaps, what are our key risk areas, using a framework that's scaled either for your industry or for your company size is a really important way to identify those risks and determine whether you have the right pieces in place around that. Next is evaluating what are the processes for monitoring those risks. So you've identified all of the risk areas, the mitigating controls that might reduce those risks. How are we monitoring that? Is that by having all the way down into the weeds? Do we have third-party logs or third-party tools used to identify and log security events and incidents within our organization? How are those communicated up to the board? How do we evaluate trends over time to determine whether we are, a key threat area or target for third-party actors trying to get into our organization? And what is the trend? How quickly are we responding to those vulnerabilities that are identified through these processes and mitigating them? Those are the kinds of things that if you're an internal auditor who's removed from the monitoring process, you might want to understand how does that data get reported up to me and how quickly are we able to respond to those? And then finally, how are you testing yourself? So this kind of falls into a lot of different categories. First, what types of vulnerability assessments and penetration tests are being done to evaluate the current state, right? So a pen test, really, you're having someone try and hack into your environment, either from the outside or the inside. What are they finding? How frequently are we doing this? And then what is the response time to actually implementing the recommended remediations from those pen tests? One key thing in this area that I like to point out is there are a lot of different flavors, for lack of a better term, of pen tests. The most common one that organizations will go through is an external pen test. And it's probably the most important one because it shows you what is exposed to the internet, what can a threat actor from the outside get to without any type of credentials. But as you may have seen from the previous slide, threat actors find their way in. And then once inside, what they can do next is really how they compromise your systems. And so that's where internal pen testing comes in. Can a basic user within your organization identify further vulnerabilities that allow them to escalate themselves to an administrator within the system or identify key data with a lower level of privileges? That's really the key, is once they're in, because you have to assume they may find a way in. Once they're in, what can they do? That's when it's really important to determine, are we doing pen testing that looks at risks both from the outside and from the inside? This is where you can identify those weaknesses and then evaluate what are the next steps. And then the other side of it is from a business continuity standpoint, do you have a disaster recovery plan, and how are you testing it? Are you doing a tabletop exercise, ideally one that's guided by NIST-based framework for the principles by which to run that exercise to determine how quickly can we recover from this? What are the gaps that we have in our recovery process? And if it's too slow, what can we do to mitigate that and reduce that recovery time as we look forward? So I'm going to hand off to the next polling question.
Yes. So moving to polling question number 4, which is who has primary day-to-day responsibility for evaluating and overseeing third-party risk? Is it the business unit or functional leadership, individual BU or operational managers, procurement or supply chain, internal audit, a combination of the above answers, or not sure, not clearly defined? And we'll keep this polling question open for another about 45 seconds. Okay, and now, Kevin, I'm going to turn things over to you.
Oh, there's the responses. Looks like it's we're all over the board with not clearly defined in business unit functional leadership taking the lead, right? So no surprise there. So thanks, Caitlin. So my name is Kevin Guy. I'm a partner in risk advisory, and my focus is around contract compliance, which involves all things third party risk and vendors and suppliers and anybody that touches the organization or the enterprise that's not an employee, and the risks that they bring inherent into the organization, helping clients understand those risks and better yet mitigate the risks as much as possible. So, obviously third-party risk as it relates to the supply chain disruption is nothing new. Third parties have been around since beginning of time. Everybody uses third parties. A lot of companies more than others, obviously, and that list of third parties can continue to grow over time, and looks at distributors and joint venture relationships and outsourcers, people like that. Not to mention just vendors, suppliers, royalty partners, licensing partners, things like that. So it's logistics. It's everything that you can think about where you're paying somebody or they're paying you based on a contracted agreement to provide goods and services, right? So it really, it's a great way to do business. Allows you to focus on the things you do well, but with that comes an inherent amount of risk, and a lot of those risks. This is just a few. We've kind of bucketed them into three main categories here, but obviously, Mark touched on cyber, which is a massive risk. It's certainly an emerging risk over the last 10 years, and certainly will be in the next 10 years. And so there's some similarities there, but over and above that, you have things like operational risk from these third parties. And so as you're forecasting demand planning and your downstream operations to your end customers or your clients, you rely on third parties to meet those demands. And if they're unable to do that, that puts your process and your planning and your margins and your income streams at risk. You talk about supplier continuity. Are they going to be around? They're getting bought and sold and going into business and out of business and going from public to private. And, those kinds of disruptions in the supplier network certainly can have an impact on your business and your organization. So understanding, how those risks, can impact the organization is critical. We talk about third-party performances, how well are they performing against, your expectations? If you have SLAs or KPIs and you're measuring that performance, and those metrics have, performance incentives or, penalties for non-conforming, that is a good way to guide it. But if you don't, look at those routinely and update them to match your business needs, then, they're of less value. But, how are they performing against what your expectations are? And how have your expectations changed over time with an existing supplier in terms of their performance? So we talk about labor shortages. This is not a new thing, but as people tend to bounce around from job to job, third parties outsource their operations to fourth parties or outsource their operations overseas. That can bring in some skilled labor shortage where the individuals that you expected to support your team at the third party level aren't around there, and that continuity plan doesn't exist. And so that's where we're going to have some risk to the operations of the organization. The next big bucket is just a general reputational risk. And so Mark touched on this a lot, but when there's a cyber incident and it's related to a third party of an organization, you rarely hear about that third party. What you hear about is your organization is the one on the news, not necessarily the third party's name who caused the breach, right? And so it can be massive reputational issues to the organization, which is obviously going to impact your customer base and that journey and whether or not they stay with you, because they want to know that they're working with somebody who's got a strong reputation. And so the fines and fees that come along with those types of issues can be massive as well. And getting that customer back or those customers back can be an expensive and a long-term journey if you suffer a reputational risk. And so, getting your hands around that from a third-party perspective is critical. I mentioned use of fourth parties. This is more and more common these days. A lot of times our clients don't really understand the fourth party is involved and they're working for the third party, and do your expectations and your terms and conditions extend to the fourth party or not? Sometimes yes, sometimes no. But just being aware of that as you contract with third parties, that they are going to hold you have access rights to understand who those fourth parties are, especially have impact to your customers, and being aware of that, right? And so the more the more you can take steps to mitigate risk. ESG oversight, we're seeing a lot of this at the board level. A lot of boards, particularly PE firms or other large organizations, they're holding themselves accountable to hitting certain targets from an ESG perspective. But you can only do so much. You're relying on your third parties to hold up their end of that deal. And if you're not monitoring their impact, it could change your ability to meet those goals and those incentives that you've committed to your board, and your board is committed to shareholders. And so looking at the third parties from that perspective as well we think it's going to be a really critical piece over the next 10 years, kind of pushing those requirements down to your third parties to achieving those ESG guidelines and goals. And again, negative customer feedback, we talked about that. I mean, if the third parties aren't achieving their targets and they're not performing, it's going to lead to negative customer feedback, which means customers are going to go somewhere else. And that customer base, as it continues to erode, certainly has a large impact to the financials of the organization. Kind of the last bucket is just general financial. So, as inflation, teeters and back and forth and interest rates rise, can your suppliers continue to do business at the higher interest rates? Can they get the line of credit that they've been used to getting? And can they extend what they have? If not, and they have to borrow on it, can they still invest in their business? Can they still achieve the savings and the hiring targets to ultimately satisfy the terms that you guys have agreed to? If not, you could be talking about supplier bankruptcy or business divestitures. They sell in parts or whatnot. So what impact does that have on you, depending on your reliability of that third party? If there's a lot of concentration in one supplier and they go under, or they experience a severe shortage in raw materials or ability to contract manufacture what you expect, what's the plan? What can you do? Is there a backup source? How quickly can they be stood up and relied upon to make up that gap, right? So all these issues are important to keep your eye on. And the last one is, we spent a lot of time on, what did the supplier or the vendor or that third party, are they charging you correctly? Are they charging you for the price that you agreed to pay? Are they achieving, the contracted terms? Are they, providing the rebate, if there's a rebate structure or a most favored customer clause in there? How well are they compliant to those contracted terms? And if not, what is it costing you from a financial perspective? And how do you, claw those savings back if the supplier is on the hook to get those monies back for you? So these are just, again, just three big buckets that we see all the time that can have a really major impact to the organization. And so with that, we'll talk on the next slide here about, just some, I've kind of broken this down in terms of how to mitigate your risk and third-party risk, and again, how that relates back to supply chain. Really just 5 steps here. You could spin this into 10 or 15 steps if you want, but I kind of wanted to summarize some of the things that we notice depending on the maturity level of clients that we work with around this. And the first one is just really just having the oversight and governance process in place. It's got to be in your company's culture that we're going to have a robust and comprehensive, holistic, if you will, third-party risk management process. Senior level stakeholders, the key business unit leaders, bought in, accountable, and it's embedded into the organization's culture. So in other words, set the tone at the top, right? Let everybody else that cascade down that says this is a serious issue we're taking on. This is a long-term change to our organization. Most companies these days do something. Some do it a lot better than others. Those that do it better, tend to suffer less risk, less financial exposure, less reputational exposure, less cyber exposure, right? So the more you can get, senior leadership to take it seriously and build it into the culture and continue to, get better and better at it, the better off you're going to be. But you can't. The rest of the 2 through 5 don't mean a lot if you don't have buy-in from the senior leadership in the organization to get it done. Number 2 is really understand who your third parties are. How are you defining third parties? Again, we take a very broad approach to third parties. It's everybody who's touching the organization, and could be contractors and temp agencies and logistics providers and landlords and things like that. So it just, investment companies, other partners, your healthcare companies, your TPAs, anybody where you've got a contract, you're paying them, they're paying you to perform services, provides risk to the organization, some more than others, right? So, but understand to you in your organization, how are you defining third parties and who are they? And then if you have access to the fourth parties, who are the fourth parties? If you know who they are, who's using them, what are they doing, what service are they providing, whatnot. So 3, get a weighted risk assessment model, right? So there's a lot of models out there, from pretty straightforward models and to very complex, depending on, again, the maturity level of where you guys are in your program. But have something that gets bought in at the top level, weight them accordingly, and most importantly, I can tell you is once you understand it, it takes a while to do it the first year. Update it at least annually. If it's fairly new, I would do it every 6 months because you'll learn things, you'll figure things out. If it's pretty mature, still do it annually. Businesses change, you buy companies, you sell companies, you outsource a major function, you insource a major function. It all changes that mix up, which changes your risk profile. So get a profile that people can buy into, agree on, weight it, and then update it as necessary. Forward is really just the policies and standards that you're going to agree on. So what are we going to agree on from an onboarding perspective? What are we going to agree on from a monitoring perspective? Who is going to have accountability in that first, second, and third line of defense? How are we going to hold people accountable? How are we going to build that into our legal teams with contracts and templates and boilerplate agreements? How are we going to hold our third parties accountable and our stakeholders accountable to these policies and procedures that we've all agreed to. You know, that's pretty critical. It's kind of worthless if you do all these great things, but you don't hold people accountable to that framework that you've agreed to. So just making sure that that's part and parcel of your program is critical. Last but not least is test but verify, right? So if you want to, you know, if you've got third parties and you've kind of graded them out and you've got, you know, tier 1s, tier 2s, tier 3s based on questionnaires or surveys or deep dive assessments or interviews internally from business unit owners, agree on how you're going to test those third party that compliance over time, right? So obviously, if they're critical, if they've got access to your data, if they're global in nature, if they're a new supplier, if there's spend volatility, meaning you've devoted a lot of business to them in the last couple of years as opposed to before, those should be your tier 1s. Tier 1s probably deserve an on-site review, an on-site audit, an assessment, as opposed to less risky, less spend volatility. You know, they don't have access to your data. Those are probably questionnaires, right? So, and you can get by with a questionnaire that doesn't say you can't do an audit, but it allows you to get some level of comfort around those third parties, and then decide whether or not you want to advance them to a, you know, a more deep tissue test. So those are the things that we talk about. We're happy to, you know, help anybody who has questions. We've got templates that you can leverage depending on where you are. And so that's supply chain third-party risk.
Hey, thanks, Kevin, for all of that. So briefly here, I'm Lucy Wisher. I'm a partner in Armanino's risk advisory practice. I am based in Austin. I specialize in helping organizations design, implement, and execute their internal audit and risk compliance programs. I work in the manufacturing, energy, and not-for-profit industries, so have a good view of risk across those organizations. So firstly, wanted to talk briefly about our human capital risk. You'll find some key trends that can flow from cyber and some of the talent shortages there all the way through how do we manage third-party expectations as well. So just a few key highlights on this slide related to human capital. In cybersecurity, there is a major talent shortage. So people that are trained and are able to work in the cyberspace, there was over 750,000 unfilled positions in the US alone last year. The shortage was exacerbated by the Great Resignation and saw, you know, in the last quarter of 2002, over 4 million people unemployed. In addition to these challenges, the work culture is shifting. So younger workers increasingly valuing their flexible employment practices, such as hybrid work and purpose-driven enterprises, which can be a challenge for some companies, including professional services. I know we have a tough time finding the right resources when we need them at all times. So other things, you know, there is a big disconnect between senior executives and employees regarding the necessity of it. I'm sure many of you are going through those challenges at this time. Moving on, so diversity, equity, inclusion has become increasingly important to employees and stakeholders and investors. Organizations are using these D&I metrics to track and foster diverse and inclusive cultures, recognizing the benefits of a diverse workforce in driving innovation, creativity, and better decision-making. However, the tracking of those metrics can raise concerns within organizations, especially if they reveal gaps or discrimination. So there's definitely a focus to make improvements there. So moving on to the next slide. Let's explore maybe how internal audit and organizations can play a crucial role in mitigating these risks. So first, we need to evaluate how management has identified the emerging risks of hybrid working. And I know we've probably gotten pretty good at that over the last few years from COVID, but you know, what are your continued strategies of keeping those employees engaged? How are you managing return to work? What are those policies that you have in place? And what is management doing to monitor those? In addition, I referenced previously diversity and inclusion metrics. So some key metrics that companies are using on their day-to-day, they're monitoring representation metrics such as gender and race. They're covering equity metrics such as pay equity, promotion rates across different demographics. They're focused on inclusion metrics such as participation rates by employee resource groups or looking at their net promoter scores from their employees. They're also looking at diversity of thought metrics such as measurement of how companies ensure that diverse voices are represented within their teams. In addition to tracking metrics, internal audit should also evaluate whether their human resources framework aims to attract and retain talent within enterprises rather than within individual silos, ensuring that career progress paths are well structured and clearly communicated. And finally, it's important to assess whether your organization's broader purpose is well defined and communicated through the enterprise, including HR strategies. I know some of this is rather, it's broad, HR focused. There's a lot of confidentiality and sensitivity to it, but certainly internal audit and compliance groups can get involved and make an impact. So I will turn this over quickly here to Mark. I know we're kind of coming up towards the end here. So thanks.
Thanks, Lucy. I'm Mark Wachty. I'm a partner in Armanino's internal audit group based in Chicago. I lead our fintech team at Armanino, and my background, is primarily working in the financial services and fintech industry with about 19 years of experience. So, well, I'll hit on a few things here. Just in today's rapidly evolving landscape, clearly the regulation changes in the United States are significantly impacting, a lot of areas. There are 5 that are here on this page. Specifically around technology innovation, cybersecurity, sustainability, and third-party risk management. We've touched on a couple of those, so I won't spend a lot of time on those particular areas, given where we are on time, but at least want to touch on a few key highlights. The first one is around emerging technology. So, we see and continue to see regulators really applying existing laws more aggressively to address issues in big tech, such as antitrust, data privacy, and consumer protection. This includes, key enforcement areas from the EU and then also within the CFPB and other areas such as focusing on consumer harm. We saw some examples from the CFPB specifically on digital redlining resulting in biased and underwriting algorithms that are used by banks and fintech companies. We also see that regulators are continuing to catch up on emerging technologies such as AI and blockchain. And so certainly it's creating some uncertainty as far as expectations. There are a few frameworks that are out there specific to AI. The NIST AI Risk Management Framework, which emphasizes organizational risk management around AI. You also see that the U.S. is pushing more stringent AI regulations, particularly in response to ethical concerns and potential misuse of AI technologies. So I would just say that there continues to really be a focus on emerging areas. For cybersecurity and data privacy, I know Mark spent a great deal of time. I just wanted to highlight one thing that 18 states, yeah, I said that right, 18 have enacted different data privacy laws that have effective dates from 2023 all the way through 2026. And so really what that is highlighting is that there is just a lack of single federal law regulating cybersecurity and privacy, which is leading to a lot of patchwork around different state expectations and laws and compliance. And that, the business operations across multiple states have to comply with those different laws and regulations. And so it's really a fragmented regulatory environment, which poses significant challenges for maintaining consistent cybersecurity and data privacy standards. The sustainability and climate risk, the thing that I wanted to highlight with that one specifically is just you clearly, most are probably aware of the SEC's proposed rules, which require disclosure. I wanted to highlight, even in California specifically, that there are 3 new requirements that have come out that California still needs to do a little legwork on completing by the end of the year to give exact guidance. But any company that has 500 million or more in revenue, both public and private, will need to comply with these. And it doesn't mean if you're physically in California. It can mean, are you selling to anyone in California, or are you touching any California in any way? So there's also 20 states that have implemented anti-ESG legislation. So there's a lot of changes and challenges in this area. and things to keep track of. So your compliance departments have a lot of work ahead of them, and just want to make sure that they're thinking through those sort of challenges. There are also geopolitical influences, and so thinking about challenges, for example, with China increasing their influence over around international technology standards, and so this could create geopolitical tensions here in the U.S. From a global technology landscape and what that means. You think about areas such as trade policy and sanctions, specifically around exports or imports from, export controls related to Russia and China. Financial regulations, where we're seeing a lot more of interagency cooperation and task force being performed, and really that's just to help with resource constraints and making sure that that at least these agencies are cooperating together, which means things will move faster and more swiftly for our regulatory brethrens and how they implement those changes into our organizations. There's also, I would say, that a more focus on private sector, and so looking at voluntary self-disclosures and whistleblower programs. Those are certainly identifying issues and highlighting. So how have departments or organizations really built out their whistleblower programs and making sure they think through those. There's operational resilience and risk management governance challenges. Thinking about, we talked a lot about AI, the issues that need to happen there. And then I would say financial crimes. So AI is presenting both opportunity and challenges around financial crimes, where AI can detect and prevent capabilities, but also introduce new risks that we need to be careful from a regulatory perspective to ensure that ethical use of AI and consumer protection. Next slide, please. So really, I just quickly want to touch on that. Here are 4 areas that I would just say, as you're thinking about your approaches to mitigating these types of risks, a robust risk management framework is key and paramount. It's something that is an element of the framework that needs to have clear roles and responsibilities and accountability, just to make sure that regulatory compliance across the entire enterprise is being dealt with appropriately. And then secondarily, equally as important is being agile and just making sure that you adopt appropriate strategies to be able to continuously monitor and regulate all of the changes that are happening. With that, I will click over to our next presenter.
So it looks like we are almost at time. So I don't think we'll have enough time to really dive into the emerging risks, but digital disruption and climate change are the emerging risk. And so you guys can take a closer look at these slides when we send over the presentation deck. And I think we just have maybe enough time for the last polling question, which is, what topic would you like to hear about next? AI risk management, fraud, governance and culture, technology disruption, or use of technology to cover shortages?
Thanks, Caitlin. And while you guys are answering that, we will cover AI and climate change, which are the emerging risks, in our next webinar. Apologies, we did not get to that today, but we will also share the slides. On the slide specifically for artificial intelligence, we have put in some questions that we believe internal audit should be asking of the business, to put a focus on risk management when it comes to artificial intelligence, around how is AI being used, who's got access, what kind of data are going into the systems, and then what frameworks are in there. There are a bunch of new frameworks that have come out recently around artificial intelligence, from ISO, from NIST. There's the EU law that went into place last week for companies that are developing AI systems. And then you've got the Institute of Internal Audit, David, a framework for internal auditors to use when assessing artificial intelligence as well. So we've put in some references to those in the slides that you guys will have access to.
Thank you, Liam, and thank you to all of our presenters. We will follow up. Some of you guys submit Q&A questions, and we'll make sure to get you some responses to the questions that you submitted. And then we also have just, a list of some of the services that we do offer, as well as some thought leadership some interesting articles that we've recently written, as well as a QR code to all of the other assets we have on our website. So thank you so much for attending. And we hope to see you guys for our next webinar. If you do have any further questions, please feel free to reach out to Liam Collins. If you have any questions about any of the polling questions, please email elevatelearn at armanino.com, and we'll make sure to send out the deck as well as the recording from today's session. Thank you all so much for your time today.